This is Donegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.
The Fed is trying to create inflation, but the commercial banks aren't eager to loan the money into existence. And so that money is only really being loaned to their buddies on Wall Street, who are then able to inflate asset prices higher, the hedge funds and the big funds and the big money and the high net worth people. But the people on the street aren't getting that money. And that money is sitting in reserve accounts at the Federal Reserve and in accounts at the commercial banks, just not loaning it into existence. So the Fed has made it very clear that they're going to try to actually pump money into the public directly by usurping the commercial banks, going directly to the public. You're seeing more and more desperate efforts and measures to get money to the people. This is ultimately going to be very, very, very inflationary. And what the Fed is doing ultimately is sowing the seeds for the destruction of this currency.
We're in the midst of the largest wealth transfer the world has ever seen. Corporations right now are doing better than they have ever done. Meanwhile, I think it's 60% or better now of U.S. small businesses are gone. They're gone forever and they're not coming back. Going back to what we were talking about, the lies and the propaganda. The middle class is the economy. The stock market is not the economy. I know we have certain politicians that keep pointing at the stock market. Look at the stock market. We're doing great. Economy's booming. Garbage, nonsense, fake propaganda. The stock market has nothing to do with what's happening in the economy. As the economy free falls, so we're in free fall right now, stocks will rise as more debt is promised to this market. That's all the market cares about. It doesn't care about people being taxed. It doesn't care about people losing their jobs. It cares about nothing except more debt. That's it. And we're going to see much more debt being shoved into this market, more treasury purchases, asset purchases by the Federal Reserve moving forward. The Fed is running the show along with the major Wall Street banks and some of the major Wall Street hedge funds. That's how it's playing out. Now, just to go further, because this was a pretty big question, there's going to be a time when all of this overcorrects. Stop borrowing, stop putting cash away to the side, stop buying undervalued assets, because this risk-on environment is going to turn to risk-off at one particular time. And I don't know when, I don't care when. People keep asking me, I don't know. This has gone way beyond I think anyone would ever imagined that we would be in the environment we are in right now. Again, propaganda, fakery, lies. This is not what we need. We need a world leader that's going to level with the American people and say, we got issues. I think, and I believe, if we had a real world leader that would tell people the truth, would it be political suicide? I don't think so. A lot of people tell me, Greg, if a politician would do that, it'd be political suicide. No, people want to hear the truth. They want to hear the truth. People know the truth when they hear it. If we had anyone that had the guts to level with the American people, explain to them what we're in right now and what we need to do to get out of it, well, I think that person would literally be looked at as some kind of a hero. It wouldn't be political suicide. Right now, the stock market is an illusion, okay? People who are looking at their 401k plans and they're locked into them like we were talking about. What are they looking at? They're looking at digits on the screen. Hey, I'm a 401k millionaire. I'm sure a lot of people are, but they got nothing. Zero. They're not holding it in their hand. That's going to go. It's all going to go away, and they can't get out of it. Most people, they can't get out. So at one particular time, all these people are going to face the grim realization: I was a digital millionaire at one particular point. My 401k plan looked really good. Now I got nothing, and you have nothing now. Once you realize that, maybe you'll get a little scared, because I think people get a false sense of security. To me, I'm always thinking about it. Where's the opportunity? For me, right now, you know where it is. I think it's in precious metals. They're massively suppressed. Look for the Dow to drop substantially at one particular time. Look for gold to be twice the Dow. With regard to being a bull in the market, I'm a bull with regard to trading the market. And I can flip this on a dime.
The only alternative is to raise interest rates to stop the dollar going down. Now, unfortunately, they would have to raise the rates not sufficient, if you like, to reward people for a potential loss in the dollar's purchase. They would have to go above that. And in doing that, the effect basically would be to bankrupt the US government completely, because everybody would then see the US government can't afford to pay bond yields of 5, 10, 15, 20, 25, 35%, which is where it would go to in an unrestrained increase in the quantity of money. So quite rapidly, the US government would find itself in a debt trap from which it just cannot escape.
Everybody who's taking steps now won't have forgotten these lessons, so they will be, in one way or another, preppers. Either they'll be on homesteads, or they will have a garage full of stuff that they need, or they'll have any number of other things that they should have, and they'll be more resilient. So I think resilience is the key word for the coming decade. We need to be thinking about preparing ourselves to be able to roll with punches and come out basically okay. To the extent that this has caused people to start looking at preparing for possible hard times in a really broad sense, then it may end up having done us a favor. It doesn't feel like that now, but it could be that this is one of the best things that could have happened to us, because it set us up in better shape for the really big thing that's coming later.
And had the Justice Department come after J.P. Morgan for what they were really guilty of, suppressing the price, it would have led to untold civil lawsuits against J.P. Morgan. So they kept the charges to these, I say, minor and technical spoofing charges, which is very hard to prove damages. So they kind of let J.P. Morgan off the hook because the alternative was unthinkable, putting them out of business in essence. I do foresee, and have for some time, but more so now than before, a shockingly higher price for silver, and to a lesser extent for gold. That's the one thing that is going to impact us all more than any other single thing.
Let's say Deutsche Bank goes down, these derivatives tumble, there's financial chaos, and the government say, we're closing the stock exchange in the COMEX. Well, that takes care of everything for a while, doesn't it? Now they got a week or so to think what they're going to do, and they're going to come back and they'll say only needed commodities will be traded from now on. Metals aren't needed. Of course, silver is, but they could say whatever they want to say. So the agricultural commodities will be traded, but on a cash basis only and 3 months out from now on. The Treasury market will be run by the Treasury only. There will not be market makers in the Treasury market anymore. The stock exchange will open on the New York side on Wednesday. It'll open the Amex on Thursday. On Friday, the NASDAQ will open. And there's new set of rules. No margin is allowed anymore. All margin calls will be made on the following Thursday. Or on and on. Once it breaks through, all the algorithms on the planet will go long silver. Because once you're at a new high, the algorithms know that any new buying will take it far higher. And then it's a game of quant against quant. But when it comes down to settling, that's what's going to take it even further, because all the paper contracts that are going to be bought by the quants only control the price. They don't control the physical. So that the ones that need the physical will be the industrial users. I mean, the industrial users see the quants are in there, and they may not think in these terms, but silver's gone from 60 to 75 in 4 days. But it took 4 months to break through that $50 barrier the fourth time. They're going to get concerned, and they have to buy it physically. So that's going to drive the physical supply. At the same time, there's multiple contracts per ounce going crazy. Wait and see. It's going to be an exciting time in the precious metals markets. It's not over yet by a long, long ways.
It's quite clear when it comes to gold and silver prices, and that is to say that we are still in a very bullish trend, and we are likely to remain so for many years, really as long as governments keep debasing their currencies by printing money and doing this exercise known as fiscal expansion. It's a recipe for lower value of fiat currency and higher value for things that are stores of value like gold and silver. So I'm quite certain that the outlook for gold and silver is good for the foreseeable future. I'm not so sanguine about the prospects for the overall economy. The one thing that has really been a key thread through my whole career is the ability to embrace risk. In fact, not just embrace it, but run into it. I mean, it's a business that is such high risk. It's high risk in every area. It's more high risk than most professionals in the industry even are aware of. If they think for very long, they realize there's risk beyond all of their own professional area, social, political, economic, global, macro, micro, technology risk, exploration risk, discovery risk, all that stuff. It's just everywhere in this business.
This is what we're staring at. We're looking down the barrel of a Mao-inspired world, okay? Where I come from, living under the tutelage of Mao Zedong, isn't my first pick, okay? What we have seen the tip of the iceberg of, it's sedition, it's treason, it's criminal, and you know what? Our media doesn't care. Our media doesn't care because they're in the same tank. They're in the same tank because they've taken the bribes from the same people. And you see, the problem is that our open society has been infected and been bought off and bribed by people who don't have our best interests at heart. And, America is the prize. America is the prize that the communists have been trying to win for, the better part of 100 years.
That whole assemblage of universal basic income, cashless society, unlimited currency creation by the Fed, all of that.
It's breadlines.
Yeah.
Universal basic income. It's central planning. Remember, central planning equals breadlines.
And universal basic income, if something can be given to you, it can be taken away. You can be cut off, just like that for doing, saying, or thinking the wrong thing. And you certainly can't keep the fruits of your labor.
That's what happens when you get to the front of the bread line and the guy in front of you got the last loaf. No bread. No bread for you to come back tomorrow. No bread today. Take your chances tomorrow. Who wants to live in a world like that?
And I can tell you, if they do single payer, it will double down, and it'll be the worst aspects of our healthcare system on steroids, because you'll have nowhere to go. They'll put me out of business and everybody else like me. That's what they want. They want one size fits all, single payer, government driven. And again, who stands to gain is going to be their friends. Because I think those insurance companies that survive, and by the way, you went from dozens to 5 under the Affordable Care Act. So it just contracted. And those that were too big to fail Pac-Man'd all the other ones, and the prices went up. If they allow this to go on, you're going to have maybe 1 or 2. It's going to be like Medicare Advantage. They're going to be administering their healthcare system, but they're going to be the ones, even more than they are now, to decide what constitutes necessary healthcare. Your cataract isn't necessary. Your tonsillectomy isn't necessary. Your cancer is not necessary because it's going to cost too much and you're going to die, so we'll put you in hospice. If anybody really thinks they're going to get their nose job and all this stuff done, I got news for you. It's not happening.
We don't need a financial reset for precious metals and precious metals markets to do well. The market share, as we've discussed before, of precious metals related investments is less than 0.5% in the total savings and investment matrix in the United States. If we merely return to the 3-decade mean, which is between 1.5% and 2%, in other words, if we didn't win the war against the dollar, we just lost it less badly, you would see a phenomenal flow of funds into precious metals, which is what I think is going to happen.
Sorry, folks, there's nothing special about us other than that we were founded on biblical principles, on the principles of individual liberty that protected us. We were built on a solid foundation. It took a long time to erode that foundation, but it has been eroded, and we are in great danger as a nation, as individuals, as families, and we need to prepare accordingly.
Japanese people, 3.6% obesity, 126 million Japanese crammed into a landmass 18,000 square miles smaller than California. And so California has like 40 million people, Japan 126 million people, same landmass. And you have over 20,000 deaths in California and under 2,000 deaths in Japan. It's so obvious that it's an obesity hyperglycemia situation. It's so obvious. And as we mentioned before, it's been known since 1918 that this is an issue, and they never talk about it.
This is intentional behavior to deceive and falsify the record in one way or another. Preventing ballots from being counted, counting false ballots, manipulating the statistical figures that you turn out, whatever it may be. So this thing is a criminal case. And it's amazing to me that it hasn't been handled as a criminal case to begin with. AOC is telling us they're going to draw up lists of enemies of the people. Any prominent person who supported Trump is going to be on AOC's list. Well, now you're talking about neo-Bolshevism. Right? That's exactly what the Bolsheviks, that's exactly what the Nazis did. That's exactly what any totalitarian government does when it gets into power. It draws up a list of its enemies and then does bad things to them. So are we hearing this? So you see, this isn't simply a matter of the Nixon-Kennedy problem, the abstract problem of, oh my gosh, we'll have an illegitimate person in as president because he didn't really win the vote. Here we're going to have an illegitimate person in as president whose supporters are all demanding Bolshevik purges. And you will see even worse from the media, and you will see worse from big tech. Big tech is certainly not going to be reined in terms of its censorship and its manipulation by a Harris-Biden administration. It'll be exactly the opposite. Same with the big media. If the systems of due process which already exist can be thwarted, not just circumvented, because normal vote for it is circumvention. It's done secretly, and you really are supposed to never find out about it. This is, as I said before, in your face. They predicted this was going to happen. They did it, and they're now saying, too bad for you, we got away with it. Now, what is the due process system for dealing with that when the people who got away with it then end up in control of the highest offices in the country? There is no constitutional method specified for throwing these people out if they get away with fraud, and nobody, the judiciary, the Congress, the state legislatures, if they are all thwarted in overturning this criminal result. There is no due process provision in the Constitution for dealing with it. There's due process provision in the Declaration of Independence for dealing with it. But see, we go to a different level of law here. Is it really that much in their interest in the short term to create this situation in which all constitutional bets are now off? Where do those situations generally lead? They lead to some kind of political/social/economic crisis in which there is a real honest-to-God coup by the military. The military steps in to restore order, usually temporarily, right? That's always their story. We'll just do it for a while. And then they never leave. And that's the danger here. These people have played with fire because they've undercut the legitimacy of the entire bloody system.
God bless the United States, and let's hope that a year from now we're able to look back on this and chuckle and say, hey, this is the greatest country ever, and we found a way to pick ourselves up and unite the country and move forward.
I think you have to have been living under a rock if you haven't realized that the powers that be and central banks around the world have been talking up the notion of us moving to digital currencies. So, you see, to me, that makes intuitive sense that they would allow the cryptoverse to advance in nominal terms, as in the price of Bitcoin going up dramatically, while holding metals in check, because the powers that be, done again, want to convey the notion that digital currencies are superior to precious metal. And they aren't. But that is what they're trying to instill in people. And I would suggest to you it's that very notion, the reason why Bitcoin has moved up $6,000 while gold's been held basically static. To me, it's not really about crypto versus gold. The anti-dollar trades will all do well. And the fact that Bitcoin's moved up 60% while gold's been held static only tells me that gold is catching up to do, and it will. Gold will catch up. And we just have to be patient. And if you're a holder, be patient. And if you don't own any, you might really want to think about getting some. And if you have very outsized gains in the cryptoverse, you might want to think about diversifying if you don't already hold precious metal.
I know enough of monetary history and how things come down and how fast it can come down and what the emotional repercussions are and the hardship that ensues and all that stuff because I've studied it for so long. So I've got, let's say, a view that I can't shake. I'd like to just keep it very clean and I don't know what's going to happen. And I don't. That's the truth. I don't. But I'm so well studied and I got a pretty good idea and it's pretty scary.
We have never had a period of time in U.S. history, or indeed throughout the world, where both bonds and stocks and real estate are all in a massive bubble. Never. This has never happened before. And the 60-40 portfolio isn't going to protect you. So you have to be bullish when it's prudent, but you have to get out of harm's way when you need to. I believe we're headed for a 100% crypto-backed currency. I call it a Fed coin. You call it the ECB coin. You call it an IMF coin. I don't know. I mean, I can tell you one thing. It's not going to be Bitcoin. So central banks aren't going to adopt Bitcoin because it's a fiat supply. So they're going to have their own coin, then probably engage in negative interest rates in nominal terms. And that means you're going to lose purchasing power like mad in the bank. So you have to subtract inflation from the fact that you're getting a negative yield. So, you have 100,000 in the bank. It's let's say 10% negative interest rate. So you're going to have 90. So don't keep the money in the bank. What are you going to do? You're going to spend it, which is going to create more inflation. You get the velocity of money turning over. So you're going to be, you're going to lose money purchasing power left and right. So that's why you would own gold. Not so you can so much borrow. You can still spend your cryptocurrency from the federal government. But how do you maintain your savings? How do you maintain your purchasing power? How do you maintain your standard of living? It's through the process of owning gold. If and when the announcement comes out that the Fed is adopting, a 100% cryptocurrency and your physical cash, just like Roosevelt did in 33, give me your gold. I want your gold. I'll give you some dollars back. You won't like what happens next though, because your dollars will be devalued. Well, this is exactly what's going to happen again. I mean, don't be fooled. They say we're going to a cryptocurrency. Give me all of your paper. You have X amount of time to get your, dollars out of your pocket or be fined or in prison. And you're going to have the same amount in the physical. Your physical dollars will be converted to electronic dollars in the bank. You can't take anything out anymore. Cannot take money out of the bank. You can only spend it. Okay, that's when the starting pistol goes off. You better rush into gold because that what's going to happen next. Otherwise, it'll be too late before everybody else realizes what happened.
Freedom of speech. Well, how does a community understand who its true leaders are? It's by this process of communication. And it's by utilizing the platforms that technology affords us in order to understand these various messages that are going to come to us. But you can look at Fox and you can look at CNN and you can look at MSNBC. And at the end, you get the same message. So that's not freedom of speech. And it certainly isn't freedom of thinking, freedom of thought. There's Wall Street. There's sort of like this public system, or you think it's public. And then you find out it's not. It's not. It's a bunch of fat cats sitting around a table and they're dividing up the world basically. And they have the resources, the wherewithal to get that done. And so they do it. And we don't ever look at the Federal Reserve. We don't look at the dollars. We don't look at the manipulation.
In January of 19, saying that even though we've been trading sideways and range bound below 1350 for the last 5 years, that 19 was going to be the year we broke out. And people thought I was just, regular gold shill, pumper, gold bug, all that stuff. Well, guess what? I was right. How about that? And I forecast 1520, well, really 1480 to 1520 as a gold price. It got to 1580 or so in September of last year. Fell back for about 100 days, rallied in the last week or two of the year, and finished at 1520. Well, okay, that fundamental picture did not change entering this year, even before we knew anything about COVID. I thought, well, interest rates are going to keep going down. The Fed's going to have to keep pumping. Real interest rates, where you take the interest rate and subtract the inflation rate from it for an actual inflation-adjusted return, we knew those were going to go negative. And so this year, I thought we'd get to 1,800, maybe 21 or 2 in silver. And we got to what? Almost 2,100, and this time in August. And now here we are pulling back again, just like last year. We peaked in the late summer, and now here we are going sideways, and you get all these people coming out with forecasts that gold's going down some huge amount, and it's all over, and we're all doomed and all, and none of it's true. The big picture remains the same, even with a potential vaccine or vaccines, that kind of thing. This accumulated debt, $3.5 trillion this last year of new debt in the U.S., going to be at least that much this coming year. Money's got to come from somewhere. Fed's looking to monetize anything they can. They have to keep interest rates low. Cannot allow interest rates to go higher. And so the fundamental forecast as we go into 2021 hasn't changed.
If you look at the housing market here, I think you can get mortgages now at 1%, 1.5%. And it's, people are looking at it and almost thinking, well, it's almost free money. So I might as well borrow as much as I can. And it's actually pushing up house prices. So this year, the UK will have run, by the end of the year, the biggest budget deficit since World War II. But house prices have gone up. People have lost their jobs, but house prices have gone up. Asset classes, shares, stock exchange, stock market have gone up because people don't want to hold it in cash because they're getting almost no interest on it. If you take a government bond, you're effectively, with inflation, you're getting a negative return, a negative yield. And so you might as well invest it in the stock market, invest it in property, is what people's, I think, assumption is, which pushes up all those asset classes at a time when actually the economy is doing even worse.
We've seen mass amounts of stimulus. So debasing of currencies, not only in the United States, but globally. And I think it was Japan that basically said they have unlimited stimulus. They'll keep printing money to fuel the economy. And to your point, exactly, that is why people will look at precious metals, or even what I'm hearing more and more of is digital currencies. But on a precious metals basis, a store of value, gold, silver. And part of the reason caliber mining is a business. We operate as a business, and we're doing everything we can to mitigate costs to bring gold out of the ground. We don't store gold. We sell our gold to fund our business and fund additional exploration and growth. But all to your point, we're in a period of time where very volatile, lots of government interaction whereby they're printing more money all around the world. Therefore, gold, if we look at history, gold has historically responded positively. And also in the case of the U.S. dollar, a lot of different banks and pundits are thinking the U.S. dollar could go lower, and therefore the gold has always been inversely related to U.S. It hasn't always been, but generally been inversely related, and so therefore showing a picture that potentially gold could go higher.
And in March, we actually saw the treasury market briefly break. So if anyone was paying attention very closely to the treasury market, when we had this big, when we had the news out of China about shutdowns and the virus is spreading, you started to see certain things sell off first. You saw commodities sell off. So you saw copper and oil start to go down because they're very sensitive to their demand and economy. And then you also saw the bond market start to rally. So yields were coming down because the bond market was correctly anticipating a deflationary shock about to happen. However, when we got that big sell-off in March, so we started to see, bond yields kept going down, equity started falling. But during that kind of mid to late March period, it got so bad, we started to see the dollar spike relative to other currencies. And so we actually saw a lot of forced selling of treasuries. So we had the foreign sector selling treasuries. We had risk parity funds selling treasuries. And so the yields actually started to spike in mid-March. But then actually more concerning than that is that the actual liquidity in the treasury market dried up. So bid-ask spreads became unusually wide. And that's supposed to be like the most liquid market in the world. And so the Fed had to come in and buy $1 trillion worth of treasuries in 3 weeks.
You can really express yourself, voice your opinion for or against, let's say, a politician or policy, and it's perfectly fine. Other parts of the world, You won't do that, but you still have a certain amount of freedom. So I think that's one thing that I've noticed as I've lived in different parts of the world is freedom is very, very different. And it is something I miss. In the States, we got to take a step back. And going back to that word freedom, it's a word that generations upon generations have fought and died for. And it's something today that seems to be taken for granted in a sense. And I think it's something people need to understand they have to hold on to.
The best possible outcome we can see, unless you favor complete and utter anarchy and elections being canceled and being meaningless going forward, is that the military does their deed and saves the republic. Because that's what we're really talking about here. We're talking about the collapse of the republic. And this is going to be prevented, in my view, by the people of the U.S. military. Because that is their purpose. And I believe they will do their job.
It's difficult for me right now to see portfolios that don't have 10% precious metals and precious metals equities. I consider the alternatives available to me in a circumstance with artificially low interest rates coming off a 10-year economic expansion. I think the risks of not having a 10% exposure to precious metals are much higher than the risks of having a 10% precious metals exposure. I wouldn't argue with certain investors having a 20% exposure to precious metals and precious metals securities, understanding that the insurance part of owning precious metals, which is to say owning physical precious metals to maintain rather than increase somebody's purchasing power, is extremely efficient. When you're in a gold bull market, gold does so well that holding a little bit of gold insures a lot of the rest of your portfolio. With regard to the broader natural resources segment, which goes to the first part of the questioner's question, combining gold and, well, let's say precious metals with the rest of resources, depending on your time frame and depending on your means, it wouldn't hurt my feelings, as depressed as commodities are in the historic sense. And given the anemic returns, negative real interest rate returns on other forms of investments, I don't discourage holdings in the broader natural resource portfolios of up to 30%, with the caveat that when resources return to favor, and this 30% has, of its own volition, doubled to 60 or 65% of your portfolio. In other words, perversely, when you're feeling smart about the decision and you love natural resources and precious metals, begin to sell some. When you feel good about it, take it down.
There's just this wave of debt that is swept the entire world. It is not only more debt on an absolute basis, but it's also more debt on a relative basis, relative to GDP and relative to the amount of actual dollars that are out there. And the world is bankrupt. Most people just don't know it yet. So we're up 500% in 10 years. We're still only $1 billion just in change market cap, and think we can grow this to a 20 to a 30, $40 billion market cap company.
We almost had no private practitioners and left, and now 80% of them joined the hospital in order to survive COVID. It's all over. The hospitals have what they want. They own every doctor in America. If you work for a hospital, you do exactly whatever they say. I have a friend who practiced in a local medical clinic for years and was very happy there in private practice. And he got bought by a hospital. And so he didn't fight it. He just went along, and he'd been about a month in this new practice. And one day he walked into his private office that nobody's allowed in except to put stuff on his desk. And there's somebody sitting at his computer typing. And he says, "Stop typing, put your hands down. I'm calling security." And the guy looked up and said, "I am security." He says, "I'm your administrator." He says, "Have a seat. We're going to have a meeting." He says, "You signed a contract that says that you will order 9 MRIs a month. You're behind by 6. and went on to tell him everything that he wasn't doing to meet his volume of production schedule. And so he quit and said, I can't do that. Oh, the other line he gave him is, he says, doctor, you need to get up to 7.1 patients per hour per average. You're at 5.3. We're taking the difference out of your paycheck.
Awesome. Thanks for joining us, everybody. What are we all drinking today? I got some, I have to confess, the only reason I bought this beer was it had the word gold on it. I got solid gold right here.
You got Deschutes Black Butt Porter.
It's Butte Porter, actually.
Well, it looks butt to me.
Great Lakes Brewing Company Christmas Ale here.
Drinking a red ale from, gosh, I don't remember it, but it's really good.
I've got a Woodmere Hefeweizen.
A Mondavi Merlot here. I prefer their Cabernet.
Fantastic. Well, you beat all of us in classiness, Lobo. That's awesome. That's awesome.
The metals are telling us that real stuff out there is going up. And by the way, it's soft commodities too, not across the board, but soybeans are way up. Some other prices have started to move as well. And of course, we've seen, at least in the United States, where there's been this exodus from the cities, we've seen real estate responding. So it's interesting to me. You can look at any one of these pieces and say, oh, that's because of this, or that's because of that. But if you look at the big picture, you're seeing, I think, an incipient response to higher inflation. People are seeing the writing on the wall. I mean, heck, you have Citi and Bank of America calling for $2,500 or $3,000 gold. The average person, I think, is starting to. I mean, people aren't that dumb. I mean, people like to dismiss the masses as being dumb masses, but you have trillions and trillions of dollars of new money created out of thin air, and I think the ordinary person is quite well equipped to understand the implications of that. A very key principle in political philosophy and liberty. I voted with my feet. It's a peaceful, nonviolent way of, shopping for governments or forcing governments to see me as a customer and perhaps adapt to me as a customer with not a shot being fired. I think this is profoundly important. I think it's ethical. I think it's a positive good in the world for people to vote with their feet. And I find it really interesting that millionaires and billionaires are fleeing California these days in droves. We got Musk going to Texas. Somebody else went to Texas recently. Ellison just went to Hawaii.
The situation with these banks is actually so acute. One of them could fall over any moment. And we're talking not just minor banks. We're talking about global, systemically important banks on that GSIB list, of which there's about 30 or so around the world. I mean, Europe's got 5 or 6 of these, I think. And it's a very, very ugly picture, I can tell you.
Since the March bottom of the pandemic, the dollar has fallen to a 2-year low, and it's going down further, thereby pushing everything else up. Like it pushed up the currencies, like the euro, the Australian dollar, and the Canadian dollar just reached new highs. So the currency markets are doing very well because the dollar's falling, and the metals and the soft commodities, like soybeans were soaring, base metals are soaring. Like whether it be copper, zinc, aluminum, they've been soaring this year.
I guess the surprise for me, I thought COVID could potentially really shut us down. It did in the first couple of months. I think people didn't know how to react. Drill programs were shut down globally because governments put in place very restrictive practices. And then really within a couple of months, we were back on the ground, and we've been drilling in Quebec, Guatemala, all over Canada, and really haven't lost that much in terms of our efficiencies. And in fact, some areas I think we've improved.
Rick, how about for you? The greatest surprise of 2020 from your seat?
2 surprises, really. The first surprise is kind of perpetual for me. The fact that it took gold so long to catch a bid. We joke at Sprott, having worked on our franchise through the whole decade between 2010 and 2020, that we worked 8 years to become overnight successes. And I'm surprised that the deficit spending and the collective idiocy in the United States, Canada, and other countries didn't cause people to exhibit fear earlier. But obviously, COVID let people see that the policy responses that have been in place for the better part of 20 years would continue and in fact accelerate. So fear, I guess, finally caught hold. The second surprise, and this really is a surprise limited to 2020, was that this bull market, this precious metals bull market, in terms of leadership, moved right straight from the best of the best, which is to say the Francos, the Wheatons, and the Barracks, all the way down to the exploration sector and beyond to the penny dreadfuls. The move that we saw beginning in June, where all of the juniors got a bid, irrespective of quality, is much more reminiscent of the end of a bull market than the beginning of a bull market, and would have scared me, in fact, except for that so much value occurs in the middle part of the sector.
And you've seen this, the small businesses closing. There's too many fundamental problems that are disintegrating, real economic indicators that are disintegrating and will only get worse. It doesn't matter what the stock market says. And so I think that's not really good for demand. So the thing is, yes, the pandemic forced people, because what happened, toilet paper was, you couldn't get toilet paper. A lot of things were just, in a panic, things were taken off the shelf, canned foods, rice. That's the 2 or 3 day supply chain. That's all. It's an illusion. And what makes that work is oil, not electricity, not electric vehicles, not nuclear power. It's the trucks that move. That's the bloodline. When the trucks stop moving, then this just-in-time system really starts to fall apart quickly. And the idea that we're going to transition to something, if we were going to do that, we should have did that 25, 30 years ago. We've run out the clock now.
What is different this time is that you have a group of people who are challenging the commercial banks, who are standing for delivery in the face of naked shorting. The commercial banks have always been able to short the silver and gold market to create an environment that they wanted to create through bullying and manipulating of price by selling or buying so much that the opposite end would give and the price would move in either direction to break the speculators. Well, now the others say, okay, we don't care. Go ahead and short it. Drive it down as much as you want. We are standing for delivery. And so what is different this time is that in every particular delivery month we've seen in 2020, we're seeing as much gold and silver taken off of the exchange as we typically see in a year. And so what you are seeing here is, in my opinion, a constant theme starting in 2017, and that is massive acquisition by the people in the know and pulling it out of harm's way. So you have a central theme where it's about removal of counterparty risk, possession and acquisition. This is all being done by the big money right in front of us. And the big money, according to the little man rule, I've talked about that before, the little man rule was the page 1 of the Series 7 book when I became a stockbroker. I'll never forget it. Page 1, just a little paragraph titled The Little Man Rule. Little man never wins, it says. They always move after the big man has positioned his or herself. So that's the bottom line here. The big money is showing a pattern of acquisition and removal of counterparty risk. And these things are happening as gold has been reclassified as an ultimate form of collateral, a riskless asset. It's just too convenient to not notice. So to me, that's the big change, Dunnigan. It is this year more than any I've ever seen in 30 years.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com. This is Donegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.